basically the people came to us asking for this model with profit sharing, because they either had some luxury properties that we would not take on. One of those properties, our first profit sharing property, has been featured in Forbes as one of the most luxury Airbnbs in Europe to visit. So we seen, okay, maybe there is another opportunity besides master lease here. And initially we wanted to focus only on the luxury properties, the ones that we cannot master lease. But there was a lot of demand for the management as well. And we decided, okay, if we cannot take it as master lease, maybe it's better to take it than to give it out to the competition.
This is episode number 81 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I'm super excited to be back again with you this week. 81 episodes now, and I continue to just get blown away and amazed every time that I talk to an amazing host like the host that we have on today. It really is probably the most fun aspect of this business and this community that we've built up is just coming up with amazing ideas and hearing how other people are really incorporating this type of business. You know, when I first got started, it was just, rent out a basement, make some money, and, see where it takes me. And now, having built up a management company ourselves, continuing and talking to investors, coaching people on how to be able to grow this business, it's just opened up so many doors, because everything really comes down to the network and the people. And that's why I really love the show, is because we have some amazing people that are willing to share their experience and help each other grow. So this is actually one of the things that I want to do, is I actually want to talk with you and find out where you are in your business and how we can help you. Some people get intimidated by short-term rentals. They say, man, I love listening to the show. There's so many amazing people. People are making really good money and amazing business, but this isn't something that I maybe personally want to do. Maybe you're more of a real estate minded person that just wants to acquire the properties and then have somebody manage the properties for you. Maybe you're more of a capital investor and you're looking for something more hands-off passive. Maybe you're interested in management and getting into the management aspects yourself. Everybody comes into this business for a different reason, and everybody has a different goal with how they would like to utilize short-term rentals, which is why I think this is such an amazing business, being able to tie in hospitality, communication, because this is not just a real estate business. But when you can tie it in with real estate, you can make some really amazing gains. So what I actually want to do is I actually want to open up my calendar to be able to talk with you and find out where you are in your business, and if it makes sense for us to potentially partner and help you grow in whatever aspect that you are trying to utilize short-term rentals. Short-term Sage and my vision and goal for this website is really to make it the place for short-term rental experts. Whatever it is about short-term rentals, maybe you're interested in purchasing, maybe you're a real estate investor that's looking to capitalize from them, maybe you are looking for coaching and how to be able to do it yourself. We want to be able to provide you the education, resources, and tools to be able to do that. And one of the things that I actually want to do is find out where you are, and maybe we can actually help you grow there. So if you go to shorttermsage.com/partner, you can actually schedule a call with me to be able to find out how we can best help you. This isn't a consultation call. This isn't where I'm going to be trying to sell you a product. I honestly just want to be able to take, 15 or so minutes and find out where you are in your business. And if it makes sense, maybe we can create something really amazing together. Again, Short-Term Sage is the place where you can go and you can really grow your short-term rental business. But if you actually want to be able to grow your business with us, I'd love to be able to talk with you about that. So again, go to shorttermsage.com/partner, and you can schedule a call on my calendar, talk with me, find out where you are in your business and how we can best help you. And one of the guests that helped me just come up with some really amazing ideas was Dino Karic. Dino is the CEO and founder of WalQinn, a short-term rental management company based out of Croatia that has 130 properties total, 45 of those being master lease, 85 of those being co-hosted units. Dino's portfolio ranges from across Europe in locations like Brussels, Vienna, Zagreb, Porec, Sofia, and a couple other countries that I quite honestly can't pronounce, but he's also located in Costa Rica. In this episode, Dino shares his experience of starting his company in 2018 and scaling to 130 plus properties, his strategy for acquiring master lease and co-host units, and how he's been able to scale operations across multiple borders, and what it's like scaling his business in Europe. If you like my show notes for this episode, go to shorttermsage.com/STR81, or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Host Nation, to another episode of Short-Term Rental Success Stories. In this episode, I have the special honor of speaking with Dino Karic. Dino, would you please introduce yourself to the Host Nation and let them know who you are and what inspired you to get into short-term rentals?
Hi, Julian. Thanks for invitation to your show, and congrats for everything that you did already with your podcast. My name is Dino Karic, and I'm a CEO of WalQinn. It's a property management company based in Switzerland. I'm acting as a CEO at the moment, and before that, I used to work in the hotels. I worked in different kind of the hotels in Switzerland and in Croatia. I worked in the luxury hotels. I worked on the other side in the classic city business hotels, and while working there, I realized that hotels, they certainly bring some benefits to the travelers, but they do not manage to capture this new way that people live, that people travel. And I decided to start my own business, and I first started taking, while I was still working and studying, I started taking a few properties back in my hometown in Bosnia, and little by little I grew to 7 properties. I was then thinking, okay, should I maybe make this a side business, because I had an offer to work in banking. I studied hospitality, but with focus on the finance and real estate. And luckily my partner, he convinced me that there is great opportunity in short-term rentals management, and we decided to create a company together in 2018. And at the moment, we are managing more than 150 properties across 6 different cities in Europe, and it has been an amazing journey so far.
Wow. Okay. So a lot to unpack there. First off, so you were working at a bank. What was your role? And at the same time, you said you were studying.
I had an offer to work in banking.
Offer to work
at the end of my studies, but while studying, I have been working in the hotels. I have been working literally everything. I started first in the operational positions, working in F&B, in housekeeping, at the reception in hotels in Croatia, and then I did management training in Switzerland in a 5-star luxury hotel on the Geneva shore. And there I worked cross management training. I worked basically the assistant manager of the reception of the front desk, and after that I worked as a assistant manager in F&B. I managed 5 different outlets. There was one Michelin star restaurant, so it was amazing experience all in all.
Wow. And you were doing this while you were a student?
Yes, I was studying. Basically, it was some of it was part of my studies, and some of it I did on the side.
Wow, that's very cool. How does one go about finding to work? I mean, I think that's kind of the dream, is to work in luxury vacation rentals or luxury hotels.
Yeah, I was very lucky, to be honest, and I managed to find this hotel. They don't take too many interns, and it's a very high level of service. Basically, the room night starts at 350 euros. It comes to around $380. And I was lucky. They were looking for someone at the moment when I was looking for a job opportunity. They liked my approach. They liked having someone different in the team, because it was mostly a team from French and Swiss people. And they decided to hire me, and I guess they didn't regret it.
And you while you were studying, working at this job, you also started taking up properties. What was the reason for doing that?
So basically, I have saved up some money, and I started learning more about Airbnb. I was a user myself. and I liked a lot this way of traveling and meeting new people. And with this money that I've saved, I originally come from Bosnia. It's a small city, a small country next to Croatia and Italy. And basically, I had an opportunity because the real estate there are very cheap, and I decided to do rental arbitrage and to take some properties. I was doing all the online management from during studies, basically online. And my friend who was there, he was managing housekeepers, and we had automated check-ins, so it was going quite smoothly.
And you scaled that up from 1 to 7 properties about within a what time period was that?
In 12 months. So I started first with 2 properties initially, then we took a small guest house, and then another few properties, and it came up to 7.
Most of the listeners here are, U.S. and Canada based. We do have some foreigner listeners, but what were the regulations like, or what was the competition like over in Bosnia?
So I would say it's in Europe in general at that time. Airbnb was quite new, and the cities were quite unprepared. I mean, still compared to the US market, European short-term rentals market is much smaller in terms of number of units and in revenues, everything. And at that time, the regulations were very loose. There was basically almost no regulation in my home market. And at that time, only cities like Amsterdam, and London, they started introducing few regulations. But now, with the time, it changed, and now all the markets which we operate in, they are basically regulated, and you need to have a special permit from a municipality that you are able to rent the property short term. You need to meet some criteria in the way that you have the safe electricity, safe gas pipe. And but it has changed a lot especially in the last 2 years.
Do you think that it's these are? I mean, those all sound like positive changes. Would you say that these are good regulations, or do you think that they're being a little bit too strict?
I think it depends by the city. So some of the cities, like especially in the south of Europe, where the economies are not that strong and where the countries want to promote this, I would say it's beneficial because it stops black market. But in some cities, for example, in Vienna, in Austria, the regulations are getting quite tight, and the city started introducing the municipalities and even the streets in which you cannot do the short-term rentals at all, and they limited the amount of the licenses that they give out. I would say it's the opportunity and the threat at the same time. It's opportunity because it creates some new segments in the market, and it expands the city centers because they mostly regulate the city centers. So it opens up some opportunities on the edges of those zones to make some very nice projects and to capture this change.
What was it like with your rental arbitrage master lease investing during that time? Was there a lot of other people short term renting at that time and using that strategy to acquire properties?
Not really. So in some of the markets which we operate in, we are first adopters. Basically, we're first property management company to be out there. In others, we are either third or fourth company that appear to do so. But not many companies decided for a master lease model. That's the first thing, because it was the question of the capital and the capital investment. And for us, all the time until this March with the COVID, it was quite good strategy, and we tried to balance our portfolio between master lease and just pure property management to have to be aggressive, but not overly aggressive, and to have some safe income.
I really like that. So you were balancing. You said your portfolio based off of, your master leases versus your managed properties.
Yes, exactly. This was our goal before COVID, was 50-50. It was also depending on the market. So, for example, if we know that in 1 year there is going to be a peak in demand, either because there is a certain change or more events, we try to take on more master leases. but then we try to compensate in another market with profit sharing properties. So we remain at 50-50. But now we needed to change our model obviously during COVID, and now we have around 25% master lease and 75% of the managed properties.
Yeah, and just for everybody that's listening, breakup of your properties. You said it's around 45 master leased, 85 managed, and then you do 10, which is strictly just the sales and reservations. So definitely want to get to that. But going back, to your story, so you scaled up to 7 properties. And then you had this point where it's just like, should I continue on? Should I, take up this job, this really good job opportunity, or work with my co-founder and start this company based off of these 7 properties that I have? That's got to be something pretty scary. I mean, you spent all this time, money, experience, probably working up towards, this lucrative job, but now you have this opportunity for you to be able to start this business. What was going through your head, and did you really feel that it would turn out to be like what it is today?
It was quite a difficult decision. It took me a long time to decide as well, and I was working hard on finding the job at the same time while I was thinking what to do. But once I took a look at the numbers and realized, okay, this is a business that can scale so fast in so many different markets because it's easy to replicate, and the management, apart from some small certain local characteristics, it's more or less the same. And I've seen, okay, this is a great opportunity. In 2 to 3 years, I can make twice as much as I would working in the bank, and I have opportunity to build something on my own. And at a very early stage of the career as well, this was something interesting for me as well. I was thinking, okay, if I need to fail at some point, maybe it's best to fail at the beginning of the career and to have all this time to make up. But so far it has been great, and I would regret if I took the job in the banking.
So these 7 properties, these were all master lease units?
All master lease, yes.
And you said you partnered with you found a partner to start this company with, and his primary focus was, you said, on construction and management.
Yes, basically my partner, in the beginning, we were all doing everything, basically. We were all over the place. But with the time, we kind of found what each of us like. And my partner, he's taking care of new projects and renovations, because now we offer to real estate investors, we say to them, okay, you have the old building, you are not taking the full advantage of your investment. We come and we do the small turnkey renovation. We make the property nice and appealing to the guests, and then we get the management contract. So my partner, he's taking care of all those renovation projects, and he's managing them more on the construction side.
Interesting. Okay, definitely. Gonna swing back to that. But you guys started this company together. With this master lease portfolio. When did you say, like, okay, it's time to start taking on management clients, or did you keep on scaling the master lease because you saw that it was profitable?
It basically the people came to us asking for this model with profit sharing, because they either had some luxury properties that we would not take on. One of those properties, our first profit sharing property, has been featured in Forbes as one of the most luxury Airbnbs in Europe to visit. So we seen, okay, maybe there is another opportunity besides master lease here. And initially we wanted to focus only on the luxury properties, the ones that we cannot master lease. But there was a lot of demand for the management as well. And we decided, okay, if we cannot take it as master lease, maybe it's better to take it than to give it out to the competition. And it came quite organically for us, I would say.
And how did they start approaching you? I'm sure that everybody would love to be, the people that get to manage, Forbes listings. But how do you even attract those types of clients to yourself?
there was opposite of what I thought in the beginning. I thought we need to have a lot of digital marketing to reach out to people, but it was word of mouth that helped us the most. We were because we were doing master lease properties. We were in a contact with a lot of real estate agents. Real estate agents, they very soon realized, okay, those guys are very good for us because we take our commission wherever they go, and they wanted to work closely with us. And they started saying to people, okay, you have this property, it's very difficult to rent it out, because not many people want to live in 200 square meters. Maybe you should give it to these guys to try to rent it short term. And this is how we got the first properties in this model.
Wow. Okay. A lot of people, when they get into the master lease and they see, the profit there, that typically they stick with that model. Were you planning to keep on continuing scaling, or was it only because someone came to you with, this more luxury property that the management opened up?
Yeah, exactly. We opened up management because we seen demand there, and soon we realized as we started scaling, to scale master lease, there's a lot of capital needed, and the capital is growing. So in all of our markets, we have a little bit of seasonality. I would say it's not that drastic, but it's normal to have more demand in summer when people in Europe are mostly traveling. But we realized that if we took on too many master lease properties, we would have troubles with the cash flow, and we would have negative cash flows in those low months. And we realized, okay, management was not something that we planned initially, but something that can help us to scale quite easier than with the master lease, because we don't need to think we can take on more properties, and then we can cover them from the money that we earn on the management agreement. And everything was going kind of like this. We started the company, we had one idea, but we have pivoted our idea and changed our model 5 or 6 times since. The goal is still the same, but the way that we are approaching it is changing.
And so after you got that first, luxury management client, how many properties, or what was the growth like at that point? Because I mean, you started the company in 2018, about 3 years later now, over 145 units. So what was that growth like during that time?
So in 2018, this time we started initially in February, but it took us some time to get the legal structure to kick it off, and we started taking new properties in April 2018, and until end of 2018 we grew to 50 properties. And then in the next year, in 2019, we grew up to 150 properties. Now this number is the same. We were supposed to grow in this year to another 250 properties with what we had secured, but we needed to change. In March, we needed to cancel a lot of properties, then to replace them with another ones that are on the management agreement. And we ended up more or less on the same number at the moment.
So you said at the end of 2018, you scaled up to around 50 properties.
And then 150.
150. And what was that? What was your portfolio makeup in 2018? Like what was what was it spread between, like the master lease, the management?
So 75% of the properties were master lease, 25% was managed, and then in 2019 it came down to around 55-45.
55-45. Okay. You were scaling really rapidly. Was there anybody else in the space kind of doing this, or were you just jumping on this opportunity before maybe other people saw it?
I would say it depends on the market. For example, in Sarajevo, in Bosnia, we are still the only agency. We are place to go if you want to be in the short-term rental space and you don't want to do it on your own. In other markets, for example, in Vienna, competition is quite strong. But in those scaled markets where there is already existing players, we took slightly different approach. We were not going property by property. We wanted to find people that have full buildings, which would offer us for turnkey renovations, and to grow to the new markets in this way. And this is what happened in Vienna. We found a real estate developer who was interested in working with us. We took on the first building, and now we are negotiating for another 250 units in Vienna with the same developer.
Yeah, and I noticed. I mean, you're spread out. I don't know. I feel like Europeans they're so much more travel. They so much more spread out. But you've got properties in Brussels, Vienna, Costa Rica. I don't even know how to pronounce that one. Zagreb, Porec, and a few more. Just to say, you're spread out amongst a lot of different bunch of different. Are those separate countries?
Yeah, those are 5 separate countries and 6 different cities.
Five separate countries, 6 different cities. How are those spread out, and like what are the regulations like? I imagine are you just allowed to operate within all those, or are there a lot of different loopholes that you have to go through?
There's quite a lot of models that you need to work. Basically, depending on the country, we have different model that we work with the owners and how the company is organized itself. Our mother company is based in Switzerland because it offers us opportunity to work inside of the European Union and outside of European Union. Then it's again another story. If it's inside of European Union, there is certain regulations. Then outside of European, other regulations. So it was quite a lot of work in the beginning. That's why it took us 3 months just from the idea to kick it off, because we needed to study all those different regulations from market to market. But once we set up the structure, it becomes much easier. And I think it's quite European thing, because all those, for me, I'm taking care of all cities but Brussels. My partner, he is now in Brussels. For me, the most further city is 5 hours drive.
Okay, so but and Costa Rica is obviously probably a bit further.
Yeah, Costa Rica is only the online services that we do. So it was a partner from other city that had the big property there. He wanted us to help, so Costa Rica is there just really to more as a favor. But we like this model of selling only online services because it gives us some exposure to those seasonal markets and off the chart markets. Because our main focus is major cities in Europe, so where you have a lot of business demand. But we want still to offer the guests this opportunity to book for the vacation. So we are trying to find a mix there.
Is it a common language between each city, or does every city speaks differently? Every country
different. Then we have some similarities between 2 of the countries which we operate in. Everything else is different. So in Belgium it's French, in Austria it's German, and then you have another 3 languages that we need to work with.
And how do you why would you, I mean, obviously you planned for this because you said that you were structuring your company to be able to be positioned to be able to do that, but why do that? Why put yourself in a position where it's like we're going to be operating in even some countries where we don't even speak the same language?
This was quite optimistic at the first point. Everyone said the same, but for me, when I was looking at the industry, especially in Europe, I realized there is not so many companies in Europe that moved beyond their headquarters. They are all based in one cities, eventually one country with a few different cities if it's a bigger country. And then we've seen, okay, maybe there is a great opportunity to become this to make this company as something attractive for potential investors and for potential exit opportunities if we cover unique geography. We figured, okay, we need only people who speak English to work with us, and everyone is speaking English in the company, so there is no much communication in the local language, only with the accountants and the lawyers. But this can be again done in English, and that's how we decided. It was a brave thing to do, to be honest. When I look in retrospect, especially with some of those specific markets like Austria, where it's business is done mostly in German. But so far, we didn't face too many problems with this.
So your company is based out of Switzerland. You're from, is it Croatia?
I'm originally from. I was born in Switzerland. I was raised in Bosnia. I came back to Switzerland, and now I'm living in Croatia.
Okay. All right. Switzerland company, but you all speak English, but now you're managing you all speak English in the company, and this is for strategic play. Definitely, I want to talk about some of the other stuff that you're doing, such as like with the investors and raising capital. But investors, you said, has been a really big part. Having a dedicated person that deals with the construction and management is also pretty interesting. So, what was the biggest pain point that you saw in your company? Where was that around? Was that 7 properties, the 50? Where was the biggest stress point for you?
I think the problems are just getting bigger with the time as you grow. But I think for us in the beginning, the most painful point was when we need to scale to have the city profitable, which is around 20 units in the city. So we need to struggle for a few months before we can scale the market and become cash flow positive in that market. But now with the time, our biggest not problem, but I would say that what causes us most pain in the scaling is to scale operations, to scale housekeeping teams, to scale local runners. It's a lot of HR process. There is a big turnover of the people. We need to have strong internal procedures to manage with this, to cope with this. Then we have seasonal workers as well. So this has been one of the most difficult tasks for us so far. But now we started solving it with we want to create quite strong HR team that can work in different markets, that speak different languages, and this has been the biggest thing that we are working on at the moment internally.
And yeah, I thought that was pretty interesting. You have a dedicated HR person, and really you need a dedicated person earlier in your company because you had so many diverse groups, people speaking different languages, people that had different needs in the different countries.
People who
Okay.
didn't meet each other because most of them they just communicated virtually. It passes few months before they are able to meet their colleagues from the other cities. So this was interesting as well. We were quite virtual from the day one because of this.
So you said it's around 20 units to become profitable, and why is that?
Just because we have some centralized costs of the city that need to be taken care of. For example, the office, all the initial salaries. In the beginning, you need more people. Then there's operations to cover because you need to be able to offer people the days off and to make up for all the schedules. So it takes some time before we have enough properties to say, okay, now we are generating enough revenue to support those city-specific things. And from that point on, our margin is growing, and we only need to add more people to the operations.
Hey, this is Julian, and I wanted to be able to give you our newest book, Airbnb Secrets Revealed: How to Build a Fortune on Airbnb Without Owning Property. In this book, we talk about the concepts of rental arbitrage investing as well as co-hosting and how you can build a business leveraging other people's properties. This book is perfect for the new short-term rental investor, and it's something that I wish that I had when I first started, as it would have saved me a lot of trouble and helped me to understand how to be able to leverage the power of short-term rental investing in your own real estate portfolio. If you'd like to get our newest book completely for free, go to shorttermsage.com/free book. Now, back to the show. How are you rapidly taking on these units, and what was your turnaround time for, let's say, a master lease unit? In the US, we a lot of this stuff we order from, let's say, Amazon. Amazon is kind of the backbone for a lot of hosts that are in this space. For your build outs, and especially being, maybe different countries and different ways that you source these materials, how much were you spending for your build outs, and what was the turnaround time to get a property up and running?
So in the beginning, we were taking the properties that are already renovated, so that are ready to use. And this took us a maximum of 15 days to take the pictures and to have everything ready. When it comes to turnkey, when we need to do some renovations, some fixtures, it really depends as well on the market, but as well on the owner. Some of the owners, they take care of the capex, the capital investment themselves. They want a certain standard. They want to buy certain furniture. In other cases, it's done by us. And then we have already some suppliers for certain things inside of European Union. It's a free trade zone, so we can order, I don't know, TVs from Belgium to Vienna because they are much cheaper and because we have a good supplier in Belgium. And it takes us around 3 months if it's full renovation to get property up and running.
So what you're actually doing is you're actually sourcing the materials from, maybe a country where something is cheaper, and then you're shipping all of those products over to that property, and then you would have a runner that is building out the units.
It depends again on the project. I would take Vienna as an example. So in that case, the owners, they had their people working on the ground. We were responsible only for management, and we take care of the ordering and arranging delivery, and then we have people on the ground that will mount it and put it in place. And then again, we are there to supervise and make sure that it's done properly and that everything is okay.
And you said that if it's a if the property is renovated and it just needs to get furnished, that's around a 2 week time period for you.
Yeah, it's around 2 weeks.
And how much are you spending on these properties?
So it takes us around, if we want to make a full renovation, like if the property was in a bad state, we are not changing anything structural, it will take us around 10 to 11,000 euros per unit.
Okay, 10 to 11. When did you decide to start working with investors in the construction aspect? Did you have any prior experience, or you or your partner, with renovations, or was this something new?
Not really. It was something new. We had some touch with it. We had some small experience with it, but not a lot. And luckily, we had one project in which we were doing only the design, and then we had the opportunity to work with the contractors and to get some know-how there. And we started taking a few small projects here and there. We had some of our personal investments that needed this, and then we got better in it. And again, we had the inquiry from one big real estate developer who said, "Look, guys, I have those projects, but I don't have time to to be around them. And would you be able to do this?" We realized, okay, now we have. It has been already 1.5 years since we are doing this, and maybe we can do it. On the bigger scale, it went great. The investor was very happy, and we decided, okay, let's start offering this as a service. Let's start looking for people to offer this model. And since then, we have been constantly busy with this, and we have the teams that are working on the projects. And I hope soon we'll have enough demand to make up the second team only for those new projects and renovations.
So this first developer, they wanted you to uh, work with them in the design aspects. You just said just with design.
They were finishing up the construction. There has been quite a lot of work to be done, and we were there at that phase. And our design project was a little bit delayed, so we had the time to work with them because we were anyway setting up the city. It was in Brussels, and we were able to work directly with the developer and with their team and to get the know-how.
So this was a portfolio of properties that you were working on, and they wanted you to lease them, or they wanted you to manage them.
They initially wanted to rent everything out. They were doing build to rent, so they wanted to rent it out long term. But because this project got delayed and they had some problems with the construction, they had they realized they cannot make a return that they wanted with the long term lease, and they wanted to try with the management. And they gave it to us in the management, and we managed to make around 45% more than they would have initially with the long-term lease. They were very happy with it, and now they want to expand. Now we are offering to them basically property curation. They say to us, we want to invest in Vienna because we expanded to Vienna. We look for property for them. We help them with the paperwork and to make the investment. We make projections for them, do the small analysis. And now we are working quite close with the real estate developers. We believe this is the fastest way to scale.
How awesome! I love that. That is very cool. So a developer investor was looking to expand their portfolio. You took them on as a management client. You were reaching out to them because it's like, hey, here's a developer. I may be, they probably need to get leased up, and that was your thought process initially, was to go in there, talk to them while they're in development, say, hey, we can lease you guys up, we can get you there. But their timeline got delayed because they're building doing a building. And then how did you even have that conversation with them about like, hey, well, leasing it might not work, but we could manage it for you?
Actually, I was traveling to Brussels. I had a meeting with them, and I wanted to book Airbnb. The city was sold out. I needed to pay like 400 euros for a night. I said, "What's going on in this city? How is it possible?" It was a completely random day, low season, and I took a look at the AirDNA. We were using it at the time, and I showed it to them and said, "Look, maybe this is something to think about for you." They wanted to have a small analysis. We did projections for the building, considering the location, the micro location, the companies that are around, and we presented it to them. They said, okay, this is great. Like, there is so much upside that we have nothing to lose to try 1 year. And now we are in third year of the contract with them.
How many units was in that building?
It's 6 units, but quite big units. Each unit is 200, between 150 to 300 square meters.
So they converted the whole building, and they just said, hey, we're gonna pay for the furniture. And
they were still in the design process. They wanted us to take care of the design, and we were basically already involved in this, and we just needed to make few small tweaks to be able to fit more people and to have more privacy with the bedrooms. But it was easy to convert.
And then this was a design project. When did someone approach you and say, hey, can you actually do like construction and management, because I have some property that I'd like to turn into a short-term rental?
It was last year around this time. It was for a project in Vienna, and the owner, the investor, he already knew what we are doing and the way that we are doing. He's seen this project in Brussels that he loved a lot. He liked the design that we are doing and the approach that we are taking in the design to make it very guest oriented, and we know what the guests want. And he had a team in place, so for us it was not a problem, because in those projects in Europe the biggest problem is to gather up the good quality construction team, and this he had already. So for us it was not that difficult to do the management of pre-existing team.
Because I mean, it sounds like you're moving into a lot of different verticals. I mean, you travel a lot, you're spread out a lot. How could you even focus on the operations of the business if you're so focused on all these different aspects?
This was quite challenging for us. That's why we decided to hire a COO who to take care only of operations and centralized services, because we have great trust with our local city managers, because those are the people that were first hired in the cities. We were the ones to hire them. They were with us from the day one, and they are the ones who take care of those operational side on the city level. And without them it would not be possible to move this much and to take on so many projects like this without their contribution and their great management. But now we needed someone. Okay, we need a point between myself and my partner and those city managers, and that's why we hired COO, and we are now working to see how it will look like.
Got it. And what has been the primary focus? I mean, when you're kind of spread out, I mean, you said, prior to COVID, you were a bit more heavier on the master lease side. Would you consider yourself more of a like master lease model, or would you say that you're more of the management? Like, how would you kind of position yourself?
We are positioning more and more towards the management. First of all, because we've seen now with COVID that with master lease it can get quite unpredictable. and we want to be on the safe side. And on the other side, because we want to take on those projects with the developers, they want to keep upside opportunity for them. They don't want to rent it out to us and to leave the money on the table. So that's why they decide for the management, and it came naturally.
With these developers, what stops them from finding somebody else? Maybe if they're more interested in the upside, are they shopping around for like the most competitive price, or is this more relationship based? What keeps them from working with you guys maybe at first, but then finding somebody else or trying to do it themselves?
This is certainly a threat. We have several ways how to position ourselves and to secure those real estate investors. First, in regards to pricing, the most of the European competitors, they move in the same price range. It's very small saving that you can make up. And the second way how we keep them is we have very transparent process. We have built a tech around property owners, and they have the access for their own dashboard and their own platform in which they can see all the reservations, everything related to the property. And this is something that is not unique, but new, and not all of the companies have it. And it's quite important for those investors because, okay, we trust you, but we trust you, and now we have the inside why we trust you. But it's a lot on the relationship base as well. Most of them, they find one person, okay, I'm happy with those guys, I will keep those guys around. I don't want to experiment too much because it can go quite wrong for them.
And working with developers that they're spending a lot of money, and they're probably putting a large a greater risk than, let's say, long-term renting, where they maybe know like, hey, this property is going to be able to bring me in this much money. I know what the capex is. I know, what the economy's like. But when you're talking about, working with a developer to short-term rent a property, and maybe they're depending, from what it sounds like, a lot on you very heavily because you're the expert in that space. When regulations are changing, there's a lot more people coming into the market. How do you work with a developer saying like, hey, here's the upside, but here's the risk, and then feel comfortable enough to move forward with your insight?
That's a quite interesting question, and we had to do a lot of this during COVID and the very sudden change in the market conditions. First of all, regarding regulations, in the beginning, we tell them, okay, if you are doing a whole building, it pays out to get the hotel license or hotel-like license, because there is this category of apart hotels and integrated hotels in which you don't need to have as many points covered as with the hotel, and you can still have the full property license. So in that case, there's no threat for us or for the property owner, because once you get the license, it's valid as long as you are not changing the ownership of the property. And when it comes to the performances, it's a lot on the, I would say, communication base. And we had problems in the beginning. We've seen that we have problems when we don't communicate the downsides loud and clear, and say, okay, look, you are going to make more during those months, but it will come January and February where you will make less than what you would do with long-term rent. But at the end, you can always convert your property. We tell them, and this is what happened during COVID. We converted properties, we rented out them long term, and the owners, they still didn't have this big downside that was possible from such market conditions, and this is what made them quite happy. And they seen, okay, especially one of our clients, he is in the hotel business as well, and he has compared our performances with the hotel performances, and we are doing much better. And it's because we have much more flexibility to offer the property for 3 months, for 5 months, 6 months, to navigate this period of COVID and low demand. And then after that, you have again the upside is there. And in case it does not recover that fast, you can always keep on the long-term lease.
going back, you said that there's some other property management companies out there. Is, are people as focused on property management in Europe? Because you mentioned some tools, and I'm sure you're probably using tools maybe like Hostfully or PMS, channel managers, dynamic pricing, stuff like that. Are the property management companies that are in Europe a newer or older and not utilizing those types of tools?
I think it depends a lot. The big companies, they have great tools and great technology behind. The smaller local companies, those are the ones that struggle with technology and they don't take the full utility of it. I would uh, mostly say as well for this analytics and business intelligence, it's not that popular of the tool. Most people, they use channel management, PMS not that much because they use channel manager kind of as a PMS. But the bigger companies, the more established companies, they are strong on tech.
And are there a lot of bigger, more established companies operating within Europe, or is it a pretty small competition base?
It's not the big competition base. There is some very successful companies. They are mostly focused London, Paris, Berlin. Not many companies are covering those, let's say, alternative markets and smaller markets. And this is where we see our opportunity. It's also in a potential exit. I'm talking a lot about the exit, but it's the way it is. In the potential exit, we see that some of those big companies that is established even from the US, when the consolidation in the industry comes, and I think it will come sooner or later, they will need someone to expand to those alternative markets, and this is where we come into place, because it's much easier to work with someone who already has established connections, established operations, than to build it out on your own.
Got it. So you're seeing the larger companies focus probably more in the vacation destinations, but your mindset was, I'm going to focus on more of like the urban, more of the the smaller markets where there's still travel and still people looking to for different reasons, whether that's maybe business or vacation, but you were focused on the outside areas where a lot of these other companies weren't looking.
Exactly. Where we didn't have strong competition and where we could expand to be the market leader.
And now you're working with developers and investors that maybe aren't necessarily looking to invest in maybe these larger cities. They're looking for these smaller markets.
Exactly. They want new opportunities, because to make a good yield in London is very difficult now, because the property prices are very high, and the property prices in Europe are generally getting higher and higher as more people want to live in those hubs and the big cities. So the investors, they are looking for different opportunities. They are taking different approaches, looking at those alternative markets, and this is something very good for us and very interesting for us, especially because we can offer them this on-ground support. For example, for Croatia, we see it's a popular destination. The number of tourists is growing. It's on the sea, and many people want to invest there. And for us, it's great because we can really be this connection for them to in those investments.
When working with your developers, when you're working with them, especially during this with COVID that happened, starting in March, how are you able to work, and what was that like, having to, because you had to probably sever a lot of ties to properties. Was that like severing relationships? Are those bridges that are potentially burned? And how are you also working with developers that were working with you, expecting a certain return, but now this pandemic happened?
I would say that all of our real estate clients were quite understanding, and they've seen the situation, they've seen what's going on, and they realized it's a major force. It's not our mistake in this, and we communicated with them from the beginning. Okay, this is our strategy. This is what we can do. Let's lease out those properties long term, but keep some other properties just in case that it starts recovering faster than expected. With some of them, we had negative experiences, but it's always like this. The times like this, they bring out the worst in people, and the best in people. So it's on which side you get. But
and you said that you're planning you're actually planning on raising capital for expanding your company. If you could kind of talk on that. We haven't had anybody on the show yet that I remember that is looking to raise capital as similar to like a startup. Kind of what's your mindset on how your vision for the company is and what you're trying to do?
So basically, we are trying the approach of bigger US companies like Sonder, like Zeus, like Stay City, the companies that took on the VC funding. We want to take outside funding for many reasons. One of them is, of course, the capital, and especially now when there is so many great opportunities, we want to have enough capital to comfortably expand and to make this a much bigger company. And on the other side, we want this management expertise, and we want to help with scaling on the next level because it's getting bigger and bigger. We now have more than 40 employees. We need to have stronger procedures, and we want to have more bright minds at the same table thinking about it. So this is why we decided to approach VCs. It's not typical VC investment, especially in Europe, where VCs are much more conservative than in the US. But we believe that they will be able to see the great opportunity that's coming from this business model. And also, we are negotiating with some of the property developers as well for the investments because there are few property developers that want to make a play in this field, and they want to have the investment, and they want to keep the interest of working with one company. And that's why they look as for the companies to invest in them and to give them properties to manage as well. So we want to make this combination of real estate investment and VC investment to get best out of both.
Now, what's pretty unique, and there are some companies. One U.S. company, I believe, Domio, was primarily focused on the master lease model, but now they, with everything that happened with COVID, they said, hey, we need to start taking on some management clients. But you started with a mix of both, and that's really smart of you. We always talk about diversifying your portfolios on the show, but with raising capital and trying to go the VC route, most companies are very strict in their lane. They're master lease model, corporate housing, or they are management like Vacasa. I think we talked to on the show here. It was episode 50. I can't remember the name off the top of my head, but larger European management companies that are focused strictly on that. How do you see the company growing when you do have a mix of both, master lease and management? Would you kind of pick one or focus on one? You're doing the construction. How do you see that growing?
So we want, we are explaining this in our approach to investors. We want to keep current distribution between the master lease and profit sharing properties. And for us, the management is really something that's going to be a backbone and how we are going to scale in the future because of those developers and real estate professionals. But on the same side, we need some of those master lease properties to keep our margins better. And we are backing up this strategy mostly with numbers. And we have the model which shows, okay, we can work without master lease properties, but our margin is going to be 50% less than what it's now. So this is we want to attract the investors more in the approach towards the guests, towards that we target certain groups of guests, corporate clients, digital nomads, and freelancers, and this younger generation of travelers. And I think this is something that can differentiate us from the other management companies, and also the not most of the management companies there in Europe, they are not looking for those investments. They grow organically and they grow in the old-fashioned way.
Right, and you're focused very heavily on working with developers, investors, people that are looking to grow their portfolios. In the same time, those might be opportunities for you to acquire master leases, or it might be opportunity for you to be able to expand your management portfolio. So there's not really any loss there. It's just different different ways for them to be able to grow, or you grow.
Exactly.
Okay. And what has been the most challenging part of scaling your business? I know that you said, being spread out was one of them, but that was one of the first. Do you have or was there any point where it's just like something broke and you needed to fix it, and what was that thing?
From the beginning, we had a network of, let's say, on-demand repairments and people to take care of that. This was one of the first things that I started thinking about when I wanted to start the company, because I realized, okay, I don't know how to fix the things. In the beginning, while I was still studying, I was not even in the city, so I need to have someone that I can call and that could fix this. So I don't think this was a big challenge for us. I would say that more challenging was in the beginning, when we didn't have a lot of properties to show and to show the trust to property owners. That was the most difficult, because here you are coming with 5 properties behind you saying, okay, I want to build this great company with 500 properties, but I have 5 now, and you should trust me because I say so. So it was not an easy negotiations in the beginning. We had quite a lot of rejections, especially in the beginning. People were not that aware of renting out to third parties. So there was a lot of explaining that we take care of everything, that we are fully responsible in the master lease to bring the property as it was. And it took us at least 6 months to establish those connections, especially with the real estate agents, and to have them kind of cheer for us and say to the owners, look, okay, I work with those guys for another 30 properties. No one has complained. They're reliable. And at certain point, when we achieve the scale, when people see, okay, they are managing 100, 120 properties, the negotiation became quite different than initially.
And what would you do differently if you had to start from scratch?
Probably we would take the real estate. We would take the outside funding much earlier. This is because at the time we were first-time entrepreneurs and we didn't think we have a good chance for this. But if I wanted to start from the beginning, I would take someone from the side with the money, with the expertise, at the same table, and try to grow these connections from the day one. Because in the beginning, when you work with many different people, with many different owners, it gets time consuming and it gets challenging. But once you get to the bigger players, it becomes much more pleasant and much more interesting.
So raising capital early, I mean, the business is very profitable compared to most businesses. Why start the capital so early?
Not too early, I would say. Not in the first stage to have a VC, but to have at least angel investor who is connected to the real estate, who has connections in the real estate world, who can put out some great words out to other people. Just because it makes this initial stage of scaling the business and finding the first properties much easier, and this is what we have seen with the time.
Got it. So more so about the connections than the capital, and that's what you're looking for with raising venture capital is more for the connections.
Exactly. And I mean, if someone has already established and worked in real estate industry in that market, then it's much easier. But if you don't have connections, if it's first time that you are going in the real estate industry, I think it's better to have a smaller part of the bigger cake.
And how do you see that looking with raising capital when we did take this hit with COVID? I'm sure that you were showing very high profit margins. Those first couple years, but when investors maybe see a dip of maybe over 50% of your profit margins being cut, like how do you communicate with them and still receive as much as you like for the capital that you're trying to raise?
So what we are trying to communicate at this point is that this is a great opportunity, because the contraction that happened in tourism in general is the once in a lifetime. As at least in the last 8 years, it didn't happen. So it will bring many people out of the business. In the markets in which we operate, we already seen supply drop of around 30%. We are back in terms of supply, we are back at 2014, 2013 levels. And I have this feeling that when everything ends, when we have a vaccine or at least a safe way to travel, it will be a celebration. People will go out there, they will want to travel, and there will be a strong peak in demand. Supply went down, and there's all those great opportunities to capture the properties of other companies, of people who wanted to go out in this market, then they got burned and they don't want to be close to it anymore. So if we have a capital at this point, we can capture this opportunity and make it even more profitable in the future and scale much faster than we would if the industry kept on doing good, because the RevPAR and the occupancies, they started going a little bit down with more properties coming to the market. So it can be a healthy correction all in all after this pass. And there is already a lot of VCs in Europe that are focused mostly on prop tech or on tourism, and that have raised funds during COVID and that made 4 or 5 investments during COVID. And I think they are quite resilient to this kind of crisis. We are already approaching the end of the crisis, so I believe they will look at it as a good time to invest in this space.
Awesome. And one last question. What would you ask another professional host, maybe someone that is in a similar place than you, or maybe at that next level where you're trying to go? If you could ask them anything, what would that be?
What brought them there? If I'm asking someone who's managing a bigger company, and I would want to learn more about how this scaling process happened and how do they take care of those problems that we are facing, primarily with the staff and with the high turnover of the people. And I didn't have so much contact with the hosts from US, so I would love to know more about ways to scale in the US. My initial idea was by looking at people in the US and what they were doing with the master lease model. So it gave me inspiration, and I would love to learn more about the US market and what are the problems people are facing there with the real estate owners and with the regulations. Also, with much bigger players than you have in Europe, because Vacasa or Sonder, they are probably the biggest players in the field. So it's not the same to be in the city with them and competing with for the properties with them. So I would be very interested to see how they are doing it.
Awesome. Well, thank you so much, Dino, for taking the time today. And what's the best way if anybody wants to be able to reach you, if they have any more questions or they want to find out more about you and your company?
So you can find me on LinkedIn, or you can find my company. It's spelled with a Q and the double N in at the end, but I guess you'll be able to see it from the title. And if you want to reach out to me at LinkedIn, you have some opportunity you want to discuss, or you want to learn more about the way we work and our model, I will be more than happy to answer to you.
Awesome. And of course, I'll include all links in the show notes. Thank you so much, Dino, for taking the time. And until next time, Host Nation, keep on hosting.
Thank you, Julian. Thank you for the invitation, and have a nice day.
Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.